Alright, so hi guys, welcome to lesson 7, the impulse pin bar strategy, which is the cousin of the impulse pullback strategy. So once again, this is a very powerful strategy that I use daily and is based on 15-minute candles. So a quick overview on the strategy. Once again, it's a strategy that seeks to go long on forex pairs that have a bullish pin bar that forms right after a new uptrend is signaled. And we're going to go short on forex pairs that have a bearish pin bar once a new downtrend is signaled. So similar to the impulse pullback, we're looking at 15-minute candles. That's when it works optimally. We're looking at anywhere between 15 to even 30 trades a month. I'm not put at 20, but it's about 30 trades a month. It works on all forex pairs, and ideally we use it on brokers with very tight spreads. Again, 1 to 2 pips maximum is ideal. So the whole idea of this strategy is again to identify the start of a new short-term impulsive trend, like so, right? So a new uptrend there, and wait for a pin bar to form, a bullish pin bar to form. We'll place a buy order and catch the continuation of the trend. Because usually after a bullish pin bar, it gets rejected off the support level and it continues in the desired trend. Similarly, we're going to wait for a short-term impulsive trend down, wait for a bearish pin bar to form, then it gets rejected off a resistance level. We place a sell order to catch the continuation of the downtrend. Right? It's a pretty simple strategy, but it's extremely powerful and effective. So before we get going, let's do a quick review on candlestick patterns on the pin bar. So when we go long, we're going to look out for this bullish pin bar pattern. Right? So this is a special candlestick pattern where the body of the candle, we want it to be as small as possible. Okay, or there's no candle body like in the case of these two doji-like looking candles. Little or no upper shadow, and a very long lower shadow that makes up at least 2/3 of the range of the candle. Right? So again, there are 3 criteria. We want a small candle body, we want no or little upper shadow, and long lower shadow. Okay. So any of these 4 would qualify to be a bullish pin. And remember that for the bullish pin, the color of the candle doesn't matter. It could be a green candle, a white candle, a black, purple, yellow, it doesn't matter. What we are concerned about is the shape of the candle. Okay? So recall, what does this mean? Well, this means that the price opened somewhere here or somewhere here, and bears attempted to bring the price down, okay? But that downward move got rejected off a certain support level, right? So bulls pushed it up, and it closed more or less where it started. So that's a very, very bullish signal that bears got rejected off a support level. And we often want to go long when that happens. So for the long setup of this strategy, once again, we're going to use the 6 and 18 EMA crossover to signal a new uptrend. So we are waiting for a new uptrend signal by the 6 EMA crossing above the 18 EMA, like so over here. Right, 6 crossing above 18, we have that signal over there. And we want to see a bullish pin bar appear within 10 candles of that signal, right? So in this case, the signal happened here. 1, 2, 3, 4, 5, boom, 6. We have got that bullish pin that appeared within 10 candles. That's all we're looking for. And we want this bullish pin to be cutting the moving averages, right? It should cut the 6 EMA, the 18 EMA, and it should cut the 50 EMA or be close to it, right? And so if it's far away, we're not going to take that, okay? So the moment we see that pattern and the candle closes, we're going to buy the moment the next candle exceeds the high of that candle, okay? So usually what I do is once this candle closes, I place a buy stop order just above the high of this candle. Okay, and a stop loss below the low of the candle. So the next candle, if it goes above the high, gets triggered, I'm in the trade and I'm long. Okay. So notice that for this particular strategy, there's no swing high, right? There's no swing high. It's not like the impulse pullback. There's a swing high, you know, and there's a pullback. No, this is different. This is just signal, 10 candles, bullish pin, we go for it. Okay, so it's a lot simpler in a way. All right. Okay, so for the short setup, we're looking for the bearish pin bar. So once again, bearish pin bar is the opposite of the bullish pin. three things we look at. Number one, we're looking for a small candle body where the color doesn't matter, right? Can it be a bullish or bearish candle? We're looking for no lower shadow or small lower shadows, but very long upper shadows. Okay, and so what this represents is when the price opened, the bulls attempted to push the price up. Everyone thought it's going up, all the idiots are buying, and the bears push it down. The bears reject the bulls, closes where it started, bears take control, price comes down. Okay, so short setup. Okay, so for short entries, we look for a new downtrend signal by the 6 EMA crossing below the 18 EMA. So over here you can see, there we go, 6 crossing below 18 EMA. Very nice cross. Okay, so we want to see a bearish pin bar again appear within 10 candles of the downtrend signal. Sorry, it's a typo here, it should be downtrend signal. I must have been on drugs when I wrote this downtrend signal. No, I just copy and pasted it. All right. Now, again, the bearish pin, so again, see here, cross, 1, 2, wait, what am I talking about? The moment it crossed, okay, the next candle was a bearish pin. There we go, there's a bearish pin bar, right? If no candle, body, long upper shadow, well, small lower shadow, a bit, okay. So notice it cuts the 6, 18, and 50 moving average, so it gets rejected off that resistance level. That's what we want. And again, the moment I see that, I will get ready to sell the moment the next candle makes a lower low than this low. So I place a sell stop order somewhere there. All right, if it goes below, it gets triggered, and my stop loss, the high of this candle, almost hit my stop loss, as you can see. Ooh, boom, went down. All right, so I always tell people that, when you trade, the moment you place the order, don't look at it. Don't look at it. Okay? Because if you look at it, you're going to get heart attack, right? You're going to go, oh my God, okay, my stop, oh my God, okay, God, right? And then, so don't look at it, right? I don't care how it gets there, as long as it gets there, right? I don't like to write the journey, if you will. All right, so that's the short setup. Okay? Great. Let's move on from here. All right, so for the chart setup on an MT4, we're going to use the same chart settings as the impulse pullback strategy. So same thing, 4 moving averages. We're looking at a 6 EMA, 18 EMA, 15 EMA, and the 200 simple moving average on 50-minute candles. And we're going to confirm it with the H1 candles. All right? Okay, so now you understand the basic setup. Let's look at the specific long setup entry rules. Okay, so here are the rules. You got to follow the rules strictly, right? So first, we want to see a bullish signal from the 6 EMA crossing above the 18 EMA. Check. And when that happens, ideally we want to see a very clear uptrend, right? So it's a 6 and 18 EMA is above the 50 moving average. 50 moving average, ideally above the 200 moving average, clear uptrend. Okay? And like I mentioned, we want to see the bullish pin bar appear within 10 candles of that bullish signal. And this bullish pin bar must cut the moving averages, right? The 6 and 18 must be cut, and it should cut or be very near to the 50 moving average. If it's too far away, I do not take it. Next, I'll check my higher time frame. So I'm trading on M15, 50-minute candles. I'll check my hourly candles to make sure hourly candles are on an uptrend as well. 6 above 18, 18 above 50, and preferably above 200. And I notice when I use the word preferably, sometimes if it's not, I may still take the trade. That's a bit more risky when I use the word preferably, but it's always good if it is, right? Okay, so once I see that, I go for my entry. So I'm going to place a buy stop order just above the bullish pin bar. Stop loss order, which is a sell stop order, just below the bullish pin bar. Okay, and the distance from the entry to the stop loss is 1 hour. So it should be at least 8 pips. And I place my target price 1.5 hour above the entry price. And once I'm in there, I leave it and I do something else and I wait for the trade to either hit the profit target or the stop loss. So once again, some low risk filters, ensure you enter when there's no major news announcement that's going to happen in the next 10 candles. Go to Forex Factory and check the calendar for the day. Every morning, that's what I do. Okay. No significant resistance level within 1.5 hour of the entry price. Right. Check your support resistance levels. So let's take a look at some of the long entries that I took recently. So here we go. This is a euro dollar, M15 candles, 18th of April. Okay. So there we go. We have got the 6 crossing above the 18. 1 candle, 2 candle, 3 candle. Our bullish pin bar appears. There we go. So it cuts the 6, cuts the 18, cuts the 50, and all the way down gets rejected. I love that. Gets rejected off. So once this candle is complete, I will buy the moment the next candle goes above the high of this candle. All right, so the moment it closes, what do? I place a buy stop order just above the high. In this case, it's 0.650. And then I'll place a stop loss below the low, 0.641. So I take 650 minus 641, that's 9 pips. Is that at least 8 pips? Yes, it is. And then I'll take 9 multiplied by 1.5, I get 13.5 pips. I'm going to round it to 14 pips, so I'm going to place 14 pips above that. So 0.65 plus 14 is 0.664. That's my sell limit order. All right. So again, when I place my orders, I place all 3 orders at the same time. All right, at the same time, right? So my entry, stop loss, and profit target. It's called a bracket order. Place them all 3 at the same time. Okay. And again, notice that the 6 EMA is above the 18 EMA. The 50 is above the 200. 200 is somewhere below. You can see that. Okay. So what happens is, by the way, let me just again mention that this is 1 hour. So 1 hour is 9 pips, and this is 1.5 hour. All right, good, great. Now, let me mention something that I wanted to mention in the previous strategy. I didn't, so let me just mention it here, and it applies to both strategies. Now, again, notice how I do it, okay? So the moment this candle closes, I call it the trigger candle, right? I will start to place my buy order above the high, right? Waiting for this candle to trigger it. Make sense? Okay, good. Now, obviously, if the next candle doesn't trigger it and the next candle, goes down, keeps going down, for example, for some it goes down and it breaches the moving average, it's no longer a valid trade. I'll cancel my order. Okay, I'll cancel the order, right? That's the first thing. Second thing is this. Now, is it possible that you're doing something, right? You're in a toilet, talking to your girlfriend, your wife, and by the time you come to the screen, you've seen the bullish pin, and by the time you are here, this has already happened. In other words, the price is now above your intended entry price, which is above the bullish pin. Is that possible? Yes, of course. It happens once in a while where you say, shit, I missed it, it's off, and it's above where I want to get in, right? So in that case, no worries. What you can do is this. If it has not moved too far, like it's moved maybe 5 pips away, right? 4 to 5 pips away, what I then do is I will then place a buy limit order. Now remember what's the difference, right? Review the lesson on placing orders again. A buy stop order means you buy above the current price, right? In order to catch it if it moves in your direction. A buy limit order means you buy below the current price. So I use a buy limit order if the price has already moved beyond the intended entry. But I'm hoping it will retrace back. It will come back and trigger my order and continue going up. So I use a buy limit order. Now, it doesn't always come back. It may just fly and you never get it, right? But oftentimes in Forex, prices don't go up immediately. They tend to like ding dong, ding dong, ding dong, right? So for example, in this case, let's imagine that, okay, by the time you came, it was here, all right? The price was maybe somewhere over here. Okay, and you say, okay, the price is here. I wanted to get in here. Now it's gone above it. So no worries, place a buy limit order at 0.910. Okay, so you're telling the market, You're telling the broker, I only want to get in at 0.910 or better or lower, but not more than that. So that's my limit price. So sure enough, what happens? The next candle, it doesn't fly up immediately, right? The next candle, it opens here, it comes down. It triggers your limit order. Triggers your limit order and you're in the trade. And of course, if it triggers, it goes down a bit more, you go, oh shit, it's going down. But then, oh my god, it's gonna hit my stop loss, oh my god, shit. Boom, it goes up. Like I said, don't look at it. Let it do what it's gonna do. A lot of people, they look at after they put a trade, they look at it, it goes up and down, and they're like hypnotized like a snake looking or being hypnotized by the snake charmer, and they get really happy. It goes up, they get happy. They go pet their dog, it goes down, they get upset, they kick their dog, and they get really flustered. Don't look at it. All right. Once you're in the trade, don't look at it. But if you're not in the trade yet and you're waiting for it to trigger, you got to look at it, right? So you may have to cancel it if it moves too fast up and you're not going to catch it anymore. Now, if it moves up too far to like 10 or 10 pips or so, it's like halfway there, I'm not going to chase it. I'm not going to even put an order in. Make sense? Okay. Oh, that's the 200 moving average. Yeah, there we go. That's the 200 moving average. Hey, what am I talking about? I clicked the screen too quickly. All right, so yeah, I was at this one, sorry, okay? But I showed an example of this one, same thing, all right? Sorry about that. Okay, so that was the Euro USD, but you get the point, right? All right, so in this case, same thing. Say after you saw the bullish pin, right, the price already moved here. And it's shit, all right, it's gone. But put a buy limit order, it retraces back, triggers your order and then takes off. There you go. So no worries, right? Oftentimes it will happen, okay? So the next trade is the long Euro USD 2nd May. And again, we have got the 6 crossing above 18. We've got that signal over there. 1, 2, 3, 4, 5, 6, 7. Within 8 candles, we've got the bullish pin bar that appears. Again, cuts the 6, cuts the 18, and cuts the 50. All right, there we go. Bullish pin cuts 6, 8, 18, and 50. Clear uptrend. 6 above 18, above 50, above 200. Clear uptrend. Very nice. Okay. So once the candle closes, buy stop order just above the high 0.910. Sell stop order 0.902 below the low, exactly 8 pips. Just nice. Okay. So that 8 pips will once again be your 1R. So take 8, multiply by 1.5, you get 12 pips. So my target price is 12 pips. That's 1.5R. That would be 0.922. Place the order, walk away. The next candle doesn't trigger your order, but it's still valid. Okay. Remember, it is only invalid if it goes below the 50 or if the 6 crosses below the 80. If not, it's still valid. Next candle, boom, goes up, triggers your order, you're in the trade. And it ding-dongs a while and then it hits your profit target. Notice another bullish pin came out here, right? So if you missed that, could have taken this. But let me see, is it more than 10 candles? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, more than 10 candles, so you wouldn't have taken that. So, now this bullish pin, you see, this would not count because it must cut the 618 and be near the 50, right? This is not near, so it wouldn't count. Okay, long dollar yen 2nd May. Once again, we've got the 6 crossing above the 18. Candle 1, candle 2, candle 3, candle 4. Boom, there we go. Bullish pin. Cuts 6, cuts 18, cuts 50. Well, it didn't cut, but it's very near, right? So I said it must cut or be very near the 50. Okay, guys? So you can see a clear uptrend again, moving averages in sequence. Right, once the candle closes, buy order just above the high, 11190. Stop loss just below the low, 11182. 90 minus 82 is 8 pips, just nice. Multiply by 1.5, get 12 pips, 12 plus 11190, you get 11202. I tend to use a calculator, right? I'm not that good at mental mathematics, so I use a calculator to calculate all these things out. All right, I mean, you can also use a spreadsheet, which I'll show you under the next few lessons, how I use a spreadsheet to quickly calculate the stop loss and the profit target. Right? Use a spreadsheet to quickly get the values out. Okay, another one, long dollar yen 24th of May. Okay, so we got again that signal over there, 6 crossing above 18. Candle 1, 2, 3, 4, 5. Candle 5, bullish pin appears. Cut 1, cut 6, cuts 18, cuts 50. Very nice. Buy order, stop loss 11 pips. Target price 17 pips away. Again, 1 R to 1.5 R. Triggers the next candle, 1, 2, 3, 4, 5, 6 candles later, we exit with our target price of 1.5 R. Okay, let's look at one more, long pound franc 15 September. So again, 6 crossing above 18. 1, 2, 3, 4, 5, 6, 7. Well, there we go, bullish pin. Now, I know this is a bit of a, I cheated a bit. The candle's a bit fat. This is a bullish pin that overate last night. Yeah, but it's okay because as long as you can see, long lower shadow rejecting the moving average, right? So cutting 6, cutting 18, cutting 50. Okay. So again, clear uptrend, buy order just above that. Okay, stop loss just below that, 13 pips, target price times 1.5, 20 pips away. Okay, so there you go. Triggered here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 pips, 10 candles it triggers, so that's about 2 hours, right? So notice that most of these trades last for about less than 2 hours and you're out of the trade, right? So these are for the long setups. Okay, so just like the impulse pullback, recall that we are making all our judgments on the 15-minute chart. Okay, so in this case, we had this bullish pin that ate too much last night appear here. Okay, so before we take the trade, always check the hourly chart, which is one time frame higher to make sure that it is also on an uptrend. So this point here corresponds to this point over here on the hourly chart. And again, on the hourly chart, you can see 6 above 18, 18 above 50. Nice uptrend. That's what you want. Okay. And again, go to Forex Factory. Again, this should be done in the morning. So every morning when I wake up, I check the news of the day. And I just mark out, I will not take a trade just before any of these major news. Like in this case, again, 8:30, my God, Canadian news coming out. Don't trade anything with Canada inside. No Canada, USD, US, whatever, right? Okay. All right, guys, so let's now go through the short setup entry rules. So when we're taking a short trade, we want to see the bearish signal from the 6 EMA crossing below the 18 EMA. So once again, we want to see a clear downtrend where the 6 and 18 EMA is below the 50 moving average, and the 50 EMA is ideally below the 200 moving average. And again, all this appears on the 15-minute candle time frame. So once we've got the cross, we want to see a bearish pin bar appear within 10 candles of that signal. And the bearish pin bar must cut the 6 EMA, 18 EMA, and cuts or is near to the 50 EMA that acts as a resistance. Okay, check one time frame higher on the H1 candles, ensure it's on a downtrend as well. Again, 6 EMA below 18, 18 below 50, and preferably below the 200 moving average. Once you see that setup, we can enter the trade. So place a sell stop order just below the bearish pin bar. Place a stop order, a buy stop order, which is your stop loss, just above the bearish pin bar. So that would be your 1 hour of risk. And it should be at least 8 pips. So once again, we place our target price 1.5 hour below the entry price. That's the buy limit order. We place 3 orders at once with a bracket, entry, stop loss, and profit target. We enter it there and let it trigger. Okay. So again, ensure no major news release within the next 10 candles and no significant support levels within 1.5 hour of the entry price. So let's take a look at some of the chart patterns. All right. So the first one is a short Euro USD 12th of September. Again, looking at 15-minute candles. we've got the 6 crossing below the 18 EMA over there. So right after the cross, candle 1, candle 2, second candle, we get our bearish pin bar over here. All right. So this bearish pin, you can see is cutting the 6, cutting the 18, cutting the 50, acting as a strong resistance. So once I see that, I place a sell order. Once the candle closes, sell order right below the low of the candle, which is 1955. Buy stop order. This will be my stop loss, my entry, my stop loss right above the high. There'll be 1965. So 1965 to 1955, that's 10 pips. So at least 8 pips. I've got that. That's my 1 hour distance. So I take 1 hour multiplied by 1.5, that's 15 pips. So 1955 minus 15, I get 1940. That would be my target price. So entry price, stop loss, target price, bracket order, place all 3 at once in there. So what happens the next candle? Next candle, it goes down, it triggers the sell order, right? Because it goes below the low of the candle. Goes up, goes up, goes up, goes up, almost hits my stop loss. Ooh! Boom! Hits my profit target. I say, don't look at it, right? Let it do what it's going to do. If not, you get, upset for no reason, right? Okay. Next, short dollar yen, 12 September. Where are we? There we go. 6 crossing below 18. Candle 1, 2, 3, 4, 5, 6. Candle 7, our bearish pin forms. Again, cuts 6, cuts 18, cuts 50. Very nice rejection. Clear downtrend. Again, you want to see a very clear downtrend, which we have. Sell order right below. Stop loss right above. Profit target over there. 8 to 12. There we go. Okay. So, like I've mentioned previously, if you happen to have missed the order, okay, so by the time you looked at it, maybe it's already here. Say, oh, it's already moved without me, right? You could place a buy limit order at 11150. Okay. So if it has moved not too far away, like 4 to 5 pips away, you can place a buy limit order at 11150. So a buy limit order means it will buy if it retraces back to 11150 or higher, it will trigger, which it did, right? And it goes down. So like I said, in Forex, it doesn't go down immediately. It tends to go down and go up and tease you. So if you miss the initial entry, you can still normally get in a while, right? If it retraces back. Okay, so there we've got the short dollar yen over there. We've got the 6 crossing below the 18. 1, 2, 3, 4, 5. All right, we've got the rejection over there. All right, we've got the 6 below 18, the 50, rejecting off the 50, sell stop order, buy stop, that's 11 pips. Okay, that's 17 pips, so 1 is to 1.5, triggers, hits our profit target, we're out in 1, 2, 3, 4, 5 candles away. There we go. Okay, short dollar yen, 9 of August. Again, we've got a 6 crossing below 18, candle 1, 2, 3, 4, 5, 6. I wouldn't take this one because it's too far from the 50, right? 7, 8, 9, 10. So exactly at the 10th candle, we've got that bearish pin over there. Okay, I know the body's a bit big. It's a bearish pin that had dinner last night, too much to eat. But I see a strong rejection, so that's fine. Again, sell order. Sell stop below the low of this candle. Buy stop above the high of this candle. So that's 12 pips. More than 8 pips, that's fine. 12 multiplied by 1.5, you get about 18 pips down. So that's my profit target. Okay. So the next candle opens there, triggers, and all the way down. There we go. So once again, when we are doing the trade on the 15-minute candle chart over here, right, we're doing a short over here, check the H1 hourly candle to ensure the hourly candle is also on a downtrend, right? Where 6 below 18, 18 below 50, clear downtrend signal. So we want the M15 and H1 to be both on a downtrend aligned. We take those trades. All right, so as usual, because our stop loss is pretty close, it's like 8 to 10 pips away, we want to make sure that we trade on a broker that has tight spreads of 2 pips or less. All right, so you want to make sure you have a broker that doesn't see. Some brokers, what they do is they mark up on the pips, they make their money on that. We do not want those brokers. We want brokers that ideally do not mark up on the pips, right? So you get in at 1 pip or less, or just above 1 pip, right? We'll talk about it in the lesson on brokers, in a while. Yeah. Okay. So for risk and trade management, it's pretty straightforward. It's a fire and forget approach. So once you place a bracket order, once it triggers, don't look at it, do something else. Let it hit the stop loss of -1R or profit target 1.5R. I do not shift my stop loss, even though the price moves in my favor by 1R. I do that for stocks, I don't do that for Forex, because Forex tends to be very volatile. If you do that, you tend to get stopped out and it moves in your direction. It's a wasted winning trade. So once again, to summarize, important points: avoid entering if there's major news coming up, and exit before the news comes up if it's not hitting your profit target yet or your stop loss. Okay. Once again, check out the news calendar at forexfactory.com. Okay. So that concludes lesson 7, Impulse Pinbar Strategy. I'll see you in the next lesson.